We have Jonathan Barratt, who's a managing director at Commodity Broking Services, and he has made a number of correct calls, including his most recent forecast, such as the bounce back in gold in February that we're seeing, platinum outperforming gold this year, and he's been spot on so far in terms of going short on copper as well back in December, which I thought was a pretty bold call. Jonathan, thank you so much for joining us. Good to have you with us, and hopefully you're enjoying yourself this morning in Sydney. Let's talk about oil prices. You know, Paul's looking at the technical indicators, says doesn't see a breakout above 83 bucks. So how do you call it?
Yeah, Susan, I'll tell you what, the oil prices certainly over the last couple of weeks has kept us up at night, and I think last night was no exception. I tend to agree with the technical side that Paul has, but when you look at that chart, it looks like it is a nice ascending wedge, and that does give us a clue that we will have a bit of a breakout towards the top side. We're not sure what will be that event, but I tell you what, we're in a range, 83.10 and 79.50 on the downside. When it does break, she should have a good run to the top side.
There you go. Paul is going to have a good run at the top side. What do you think?
I'm interested, Jonathan. The Saudi Arabian oil minister, Ali Al-Naimi, said the oil prices are in the right range. He's perfectly happy with the way things are. So they're not going to increase output. They're not going to cut back on output. Some are saying that's baked into the price. I mean, would you agree with that?
Yeah, I think I would. I mean, when you listen to the rhetoric that comes from OPEC in the last several meetings, everyone really understands that they can't have prices too high, they can't have it too low, and there's enough supply at the moment. Remember, there's a lot of space coming on, there's a lot of new production coming on oil in the future. So when you look at the range, I think it's quite set. But we've always got those occasional curveballs that come into the market. When OPEC meet, they'll probably come out and say no change in supply, and I think the market will be happy with that.
And isn't there a problem here that OPEC has basically been saying it's been happy with oil prices all the way up, ever since the bottom around $30? I mean, they don't really surprise the market anymore.
No, they don't, because I think they're more a concern because they need dollars and they need sales. You know, they've got major concerns, as we've seen, and I think that they don't want to upset the apple cart. I think they appreciate the fact that oil going too high too fast is going to hurt sales, also hurt global economy, and at the end of the day, that'll hurt dollars coming into their economies. So I think they're making a sensible decisions. It's good to see oil in a range, but obviously the top end is better for them.
Okay, John, let me just ask you about peak oil prices, because we have interest rates on hold, of course, in the U.S., and some say probably for the rest of this year. So the money printing continues in the U.S. economy. I got to ask you about peak oil prices for 2010.
Look, I mean, the peak oil argument, I think, is certainly sound, but I think I'd look at 85, maybe the top side of it, but I don't see a peak oil price coming. You know, that we've got too many alternatives coming to the fray. Look what's just happening with Shell in terms of natural gas and their spend. You know, peak oil, I think, could be a long way away. Peak oil is a long way away.
Okay, so when will we see peak oil then?
Let's have a look at the price, because when the price breaks through 83, we'll have a see and see why it broke through that level, and if it gets to 140, we'll look at it then. But when you look at the way natural gas has been trading, you know, look, it's well low, and I think we can turn on natural gas, LNG and all that a lot quicker than we can look for more oil.
Wow, I didn't know you were going to pull out the 140, a record price, to talk about, John. But okay, yeah, we'll talk about it and revisit the topic then. But let me talk to you about gold, because you've been a gold bull for some time. We're looking at 1,100 and change. Is this a good level to buy into, and what are you looking out for this year as well?
Yeah, Susan, I think that's going to be a big key. One of the trigger points we're looking at, even there's a little bit of dollar-related work there last night, but we're going to keep a very close eye on what's happening with inflation in our developing countries, India and China. India 9.7, China 2.7. They're outside their bands at the moment, and I think we might get some pull towards the top side in gold at the moment. Wouldn't be surprised if we actually see 1140, 1150 around the corner. That's over the next couple of weeks, and maybe even a good challenge through 1200 later on in the year.
And what about 1,300? Because your associate down under at Commodity Broking Services, or not Commodity Broking Services, but the warrants business says maybe 1,300 for 2010, maybe 1,400 is a bit of a stretch. But what does it take to get to that range?
I think to get to those range, we're going to have to see some really pretty negative numbers on inflation coming through, particularly out of those countries that can spend. We have to address it each time it gets to that level. If inflation does start to pick up in our emerging economies, then we have a potential to get there. But I'm the sort of person that waits for a range to be hit, broken, analyse why, and then sort of try and forecast for the next level.
Okay, Jonathan, let's turn our attention now to copper, because it was a pretty bold call for you back in December to say go short on the best performing commodity in 2009. What about at levels now? It's at $3.32 a pound. Is it compelling to you now?
Well, look, when you look at it, we had that move from about 330 down to about that 270, 275. That was a nice call. We enjoyed that. Are we still going short? Well, at the moment, we're still seeing inventories. But one thing which I am focusing on at the moment